Bitcoin, revolutionary tech, or financial time bomb? Its price swings can make your head spin, but what forces are really at play? Is it just random hype, or is there a hidden logic to it all? This is Finance 101, simplifying finance, one concept at a time. And in this video, we will dive deep and try to make sense of the Bitcoin roller coaster. But be warned, this ride has its risks. Misleading news, shady influences, and ever-changing regulations can blow up your portfolio if you're not careful. Bitcoin's price dances to the tune of supply, demand, competition from other cryptocurrencies, regulatory changes, and, believe it or not, media hype. Understanding these is your first line of defense. Whether you're a seasoned investor, a curious trader, or just someone trying to make sense of crypto, this video is for you. We're breaking down the key drivers behind Bitcoin's price so you can approach it with eyes wide open. Right now, Bitcoin is at a crossroads. It's battling rivals like Ethereum, governments are grappling with how to regulate it, and the media is fueling both excitement and fear. So, what exactly is Bitcoin? In a nutshell, it was created as a decentralized alternative to traditional money, free from government control. Think of it as digital gold, designed to be a secure and borderless way to transfer value. There is no central bank involved. But that freedom comes at a price. Bitcoin is notorious for its volatility and vulnerability to scams. Therefore, to navigate Bitcoin successfully, you need to understand the forces that are constantly pushing and pulling its price. First up, supply and demand. Bitcoin supply is famously limited. There will only ever be 21 million Bitcoin. And the rate at which new Bitcoins are created is designed to slow down over time. This is called halving. Roughly every 4 years, the number of coins awarded for mining a block is cut in half. The most recent halving was in April 2024, reducing the reward to 3.125 Bitcoin per block. Think of it like this. Bitcoin is like a rare collectible card. The fewer there are, the more valuable each one becomes. Of course, demand is the other half of the equation. Bitcoin has attracted both retail and institutional investors. Demand is fueled by media coverage, investing experts, and even business owners touting Bitcoin's value. Bitcoin has also become popular in countries with high inflation such as Venezuela. But demand can be fickle. So, what happens when a major influencer suddenly dumps all their Bitcoin? The price sharply plummets. That's right, Bitcoin's supply is limited, but demand is unpredictable. Bitcoin may be the king, but it's not the only player in town. Hundreds of other cryptocurrencies are vying for investment dollars. Ethereum, for example, has emerged as a major competitor, especially with the rise of decentralized finance, or DeFi. As of October 2024, Bitcoin's share of the total crypto market was less than 57%, down from over 80% in 2017. It's important to consider that investors who see potential in new financial infrastructure invest in Ether, ETH, the cryptocurrency used to pay transaction fees on the Ethereum network. So, could a new technology steal Bitcoin's spotlight? Only the sands of time knows. Bitcoin is the king, but Ethereum and other cryptos are hungry for the throne. Here's where things get tricky. Regulation. Bitcoin was born in the wake of the 2008 financial crisis, partly as a way to bypass traditional financial systems. Because of this, the cryptocurrency remains unregulated and has a reputation for its cross-border capabilities and regulation-free ecosystem. But governments around the world are now trying to figure out how to deal with crypto. In the United States, the Securities and Exchange Commission, or SEC, plays a major role. For example, when the SEC approved the first US Bitcoin-linked ETF in October 2021, Bitcoin's price jumped. But a single regulatory decision can send Bitcoin soaring or crashing. China banned Bitcoin trading and transactions, which forced mining operations to move. How can you prepare? That's a crucial question to ask. The SEC giveth and the SEC taketh away. A single regulatory decision can send Bitcoin soaring or crashing. Regulation, friend or foe? Clearly, it all depends. Don't underestimate the power of the media. News coverage, social media, and even celebrity tweets can have a huge impact on Bitcoin's price. Positive news tends to drive the price up, while negative news sends it down. But remember, not everything you read online is true. It's important to be aware that investors can influence prices when they get too excited about an asset, causing it to be overvalued. They can also cause prices to drop when they panic about possible losses. That's why it's important to do your own research. Bitcoin's price equals scarcity plus hype plus regulation plus competition. It's about empowering yourself, not blindly following the crowd. So, let's recap. Bitcoin's price is influenced by its limited supply, the ever-changing demand, competition from other cryptos, the regulatory landscape, and the media frenzy. All of these factors combine to shape investor sentiment, which is one of the biggest drivers of price. But here's the million-dollar question. Can we predict where Bitcoin is headed? Honestly, predicting Bitcoin's future is like trying to catch smoke. It's incredibly volatile, and the factors that affect its price are constantly evolving. Will regulations tighten, stifling growth? Or will Bitcoin become more mainstream, leading to wider adoption? No one knows for sure. Limited supply, unlimited risk. Finally, Bitcoin offers exciting possibilities, but it's not a magic money tree. By understanding the forces that drive its price, you can navigate the crypto landscape with greater confidence. Stay informed, stay skeptical, and always do your homework. Remember, do your own research. If you found value in this video and wish to deepen your understanding of financial principles, we encourage you to subscribe to our newsletter. Each day, we will deliver concise financial insights directly to your inbox, designed to be easily digestible and immediately applicable. Subscribers will also receive curated video recommendations supporting consistent and continuous learning in finance. Simply click the link in the description below to subscribe and further your financial education. Thank you for watching. Stay informed, invest wisely, and we look forward to seeing you in the next video.